So let's learn how to trade imbalances and fair value gap. Imbalances, let me type it so you to see. Imbalances. I don't no need to type it. Imbalances, you know how to spell imbalances. I believe you should know how to spell imbalance. Balance, then IM before the balance, that's imbalances. Then the other one is fair value gap, FVG. FVG, fair value gap. So that's what we're going to be learning today, how to trade imbalances and fair value gap. So far, we have been learning how to trade with SMCs, which is smart money concept. If you don't understand what SMC is, it means you have not gone through the course. You should go through the course, every part of the course, to understand how we have been trading since. And I basically taught us how to trade with other block, right? And we have been profitable, right? We have been trading and making money in the group so far, which is very, very good, and I'm impressed. So now I'm going to be teaching us another trading strategy in just few minutes, in 5 minutes. I'm going to teach us how to trade imbalances, right? Now, what are imbalances? Now, imbalances are areas in a chart where there is a very, very massive move, either to the upside or to the downside. It then creates an imbalance. For instance, now, say this is a very large move. This green candle from here to here. This is an imbalance. A serious massive move to the upside. See this one too. From here to here is also an imbalance. Right? So when you see a serious long move like that in a chart, it means there's an imbalance. So this is an imbalance. This is an imbalance. Right? This is also an imbalance. Are you seeing it here? This bearish move to the downside. This is also an imbalance. Are you seeing it? This is also an imbalance. Now, there are a lot of things that can cause imbalance. It could be massive sell-off. For instance, now see this downward move here. It's caused by a massive sell-off. Let's say a lot of people are selling the coin, or there is a whale that's taking out a lot of money from the coin to now cause a massive sell-off. This one now, this imbalance to the upside is a massive buy. Are you seeing it? Right? There are a lot of things. News can cause imbalance. Let's say news come out today and the news is not favoring crypto. You see people sell off massively. You see an imbalance. So you can trade an imbalance. Now, when an imbalance occurs, it means that the market is not balanced. There is no equilibrium in the market. Equilibrium means equal balance. The market is not. There's no equilibrium. For instance, now, because of this imbalance you are seeing here, it means that there's no equilibrium. It means that the market is tilted towards the seller side more. And normally, the market will want to restore equilibrium after an imbalance. So after an imbalance, something always happens. The imbalance is always being filled. Anytime you see an imbalance, expect that the imbalance is always will be filled next. That's it. It might not be immediately, but the imbalance will be filled next. So that's the concept you should have in your mind, and that will help you in trading the imbalance. So how do you trade an imbalance? You already know the principles of trading. First of all, you need to identify the trend, right? So let's assume I want to trade this imbalance. Let's assume I came to this chart and let's assume that everything from here to this forward has not happened, but everything here backward has happened. So how do I trade it? Right? How do I trade this? First of all, I need to ascertain the trend, and from what I can see, it's in a downtrend, right? Massive downtrend here, right? So I'm going to be taking a short position. There's an imbalance here, right? So what am I going to do next? I'm going to identify the demand side and the supply side, right? I'm going to identify the demand side and the supply side. Demand is the side that is buying. Supply is the side that is selling off. So I'm going to draw a line. Let me come here and let me take my line. Let me take this. So this is the sell-off side, right? This is the supply, right? So from where you see when I draw my line here, let's draw it here. You see this point upward is my supply zone. From this where this candlestick stop, the last candlestick before the imbalance, this is the imbalance candlestick. This guy is the imbalance candlestick here. Look at it, this particular move here. is the imbalance candlestick. Now the last candlestick before the massive move is where my supply zone ends, and I'm going to draw this. I'm going to put this right like this. Good. Now from here up is my what? Supply zone. So let me label it. So I'm going to label here supply zone. Right here, this is my supply zone. Good. Now I'm also going to label my demand zone. Right, so I'm going to come, where did the candlestick end here? Yeah, this is the last candlestick before the massive move. So I'm going to draw another line here. So this guy, this down here is my what? Demand zone. That's what I do when I trade another block. I label my demand as supply zone. So I have my demand zone, I have my supply zone. Now this gap, are you seeing this gap between the demand and the supply zone? This gap here is my fair value gap. Fvg is called Fvg, is my fair value gap. So this is my imbalance, this move. This is my supply zone, right? This is my demand zone, this is my imbalance. The same thing here, this is an imbalance, right? So if I want to label it, I'm going to draw a line here. Look at this candlestick here, right? Good. I'm also going to draw another one here. Look at this here. Okay, around this side, I can just, okay, this is another one. Good. So this guy here is what? Is my supply zone. This is my demand zone. This space between the two is my fair value gap, right? Good. So that's just basically it. Let me go back to the one I'm using. Let me delete this. So when you see an imbalance, the first thing you do is to identify your two zones, your supply and demand. Supply is where it's selling off, demand is where it's buying, right? So when it's buying, normally it goes up from down. So this is my demand zone. When it's selling, it goes down from up. This is my supply zone. So these two gap, this between the space between these two is my fair value gap, right? So how do I trade this? Right, after I've identified my two zones, let me remove the label so it's a bit easier for me to trade. Now I know that this is a downtrend, so I'm going to be taking a short position. I'm going to be trading short. So what will I do? Now I'm expecting, I told you that you should assume that everything from here forward has not happened. So I'm expecting that the price is going to come up and fill my fair value gap. It's going to fill my fair value gap and possibly touch my supply zone, and it's going to come down again. And that's exactly what happened. Right, the price was here, I'm shorting, so I expect it's going to come up, fill my fair value gap, then possibly hit my supply zone, right, and it's going to come down. So what will I do? I'll come here and take my short position. Then first of all, I'm not going to take short, I'm going to put my rectangle. I'm going to come here and take my rectangle, just the way we trade on that block, and I'm going to fill this I can decide to fill this my supply zone, right? Or I can just look for an order block close to it, and there's this candlestick is more like an order block close to the imbalance, so I'm going to put a rectangle to cover it, something like this. Good. I'm going to do that. Then I'm going to take my short position. I'm going to take my short position here and put it here like this. Good. Then I'm going to hope that the guy comes. My hope is that it will come up and pick it here and then come down, but fortunately it didn't pick it, so this is like a missed entry. But then it reacted to the fair value gap. Look at the zone of the fair value gap here. This space in the middle, this space in the middle is the fair value gap. So it reacted to the fair value gap and came down. So if you had put your entry somewhere around this fair value gap, because some people do trade fair value gap, right, it would have picked it and come down, but I prefer trading it this way. So if you had followed what I expected, it should have come to this point here, pick it and come down, but it didn't. Instead it reacted to the fair value gap. It doesn't make my analysis bad, it just simply happens in market, and it happens like that. So let me look for another example and show you. Let me explain again. Look for another example and show you how to trade imbalances. So when you see an imbalance, what do you do? First of all, you identify the trend. Is it an upward or downward trend? If it's an upward trend, you take a long position. If it's in a downward trend, you take a short position. Then when you have identified the trend, the next thing you want to do is to identify your supply and demand zone in the fair value gap, in the imbalance. There is no imbalance here. Let me check if I will see in Bitcoin. I will identify my demand and supply zone, right? That's the next thing I want to do. Then you put your entry around your, if you are longing, you put your entry around your demand zone. Then take profits close to where there's liquidity. If you are shorting, you do the opposite. So I'm looking for a fair value gap here. Okay, let me see if I will. This, okay. This seems to be a good example. This guy seems to be a good example because seeing that the market came down, reacted, but then this trade, okay. Now something like this is a fair value gap. This is an imbalance. Look at it, this guy here. So what will I do? I know he's in an uptrend. At least look at it, higher highs here. Not really in an uptrend though. Let me see. This is not in an uptrend. It's more like a consolidating market. Okay. Now the market is in an uptrend. At least we can say it's in an uptrend because it breaks this high. So it's in an uptrend here. This is the current state of the market. So let's see if we can trade this. Now this is a fair value. This is an imbalance. Look at it here. Look at the massive upward move. This is an imbalance, right? Now this one, what will you do now? You identify the two zones. This is like the supply zone. This is like demand zone. Demand zone below, supply zone above. This middle is the fair value gap, right? So you can trade it two ways now. What will you do? You put your rectangle here and cover the candlestick. Cover the candlestick before the imbalance in the demand zone. Since we are longing, the coin is selling, we're currently buying, is in an uptrend. So I'm going to put my rectangle like this. So I will hope that it's going to come here and it's going to sell up. There are two probabilities here. If it doesn't react to the candlestick here, which is the other block before the imbalance, it's going to react in the fair value gap, which is like this space here. Is actually reacting here. If I also trade this, I'm going to take a long position from here. I'm going to just take long at market price for here. I'm going to take long, then I can put my stop loss here. Now if I'm to trade this, I'm going to trade this. Let me explain it to you so that you're not confused, so that you'll not be confused. Let me go back. Now remember, this is my two zones. This guy here, up. This guy here up is my supply zone. This one is my demand zone. This is my fair value gap. Now as you can see, the market has already come to fill this fair value gap here and it's here. So what will I do? How will I trade this? I'll just take a long position because it has already filled the fair value gap. Remember I told you, if it doesn't fill, if it's either it fills the fair value gap or it fills the candlestick before the imbalance in your either in your demand or supply zone. In this case, it's in my demand zone because the market is currently buying, is in an uptrend, is bullish. So it came to fill my fair value gap, which is like this center guy between the two zones, which is my demand and my supply zone. So it's already going up. So what will I'm just going to take a long position at market price here. I'll take a long position at market price here, right? Then I can put my stop loss somewhere, let's say at the beginning of the demand zone, which is here. I can just put my stop loss here, then put my take profit, let's say at 87k, right? Or just I can put it a little bit after the liquidity zone, or just slightly below. It just depends on you, right? Something like this can work, right? Hoping that since it has already filled this area, it's not going to come down below here again. Or even if it comes and it's not going to come down below this demand zone. If I say I want to put my stop loss here, it will not work. So I want to manage my risks too. So I want to put it here. Right? That's trading for you. You have to manage your risk. So this is a supply zone, yes. This is demand zone, this is a fair value gap. So in this sense, we are trading fair value gap. We are no more trading imbalance. We are trading the fair value gap, which is more like still part of imbalance, because anyway you see an imbalance, there will definitely be a fair value gap there. Right? So in essence, what I'm saying is this: when you see an imbalance like this in a chart, when you see an imbalance like this, let me show you using my part tool. When you see something like this, an uptrend, then you see an imbalance like this, how do you trade it? This is what I've been explaining since, right? How do you trade it? It's simple. You identify the two zones, right? So what will I do? I will identify my two zones. Good. So this is my supply zone. This is my demand zone. In this case, because it's an uptrend, I'm going to be taking a long position. So my mindset will be, okay, I want this market to come down this way and react either in this fair value gap or pick my entry here and go up. So you have two choices. You can put a limit order here, put your entry here, put your stop loss after this point, right? Or you can just monitor the trade and wait to take it at market price in this your fair value gap region. You can just wait for it to come within this region, and when you start buying again, you take your entry at market price, then you put your stop loss. You can put it after this candlestick before the imbalance, right? But then I explain something to you guys. If you attend the live session, I usually tell you to take note of risk management. If the stop loss, if the money you are going to be losing in your SL will be very, very much and it's going to pain you, don't take the trade, right? So if I'm to take this trade, let's say I'm taking it like this. Let's assume the markets come and react like this. The markets come down here, and it's even it's going up again, right? I can take my entry at market price inside the fair value gap, because this is the fair value gap, the space between these two zones. This point is the fair value. I can take my entry here, right? Then when I take my entry, I can put my stop loss after this guy somewhere here, right? So long I know that the loss is something I can bear. I know that the risk to reward ratio is okay. I can I can put my SL somewhere around here, then put my take profit after at the top here, right? It just depends on you. So there's no one solid way of doing this. You can trade fair value gap on all the imbalance if you like. You just need to make sure your risk to reward ratio is okay. You identify your two zones and you're following the trend, and it's that simple, right? So if you have any questions, you can ask in the group. I'll be there to answer you. Then also learn more, do more research to get more clarity with what I just showed you. You can research more, check for other resources, and open your chart. Do some practicals, look for imbalances on the chart, try to identify the zones, try to take hypothetical trades, check for the fair value gap, and just imagine trades. You can start by trading them, right? It will give you more clarity and understanding. So that will be all. This is basically how to trade fair value gaps on imbalances. So if you have any question, you can always ask in the group, and I'll be there to answer you. My name is Uncle Altone, and God bless you. Let me even show you a trade. Before I go, let me show you a trade that a signal I dropped in the group. I don't think that trade has triggered, though it has not triggered, but let me show you. I think it's fair value and imbalance I was trading. I don't know if it's imbalance or other blocks or a combination of the two, but let me just analyze that trade and why I took the trade. It's a limiter that it has not been activated, but let me just show you so that you have better understanding of what I'm just talking about. I don't know, my network is fucked up. Let me show you quickly. This thing is not loading fast. Oh god. Yes, I'm currently trading SPX. The trade is not running yet, so it's not active, but if it goes as planned, it should be active soon. I think I will need to stop this video here. The network is bad. I would have showed you, and I don't want this video to be unnecessarily long. The most important thing is that you get what I've been explaining since. If you have any question, you can drop in the group and I'll answer you. So thank you very much for watching this video. My name is Okao, and God bless you.